As an office, I have to say we have tremendously seen a decrease. Initially, there were a lot of complaints on digital lenders. We've seen a decrease in terms of digital lenders and the complaints. Most of the complaints that came to the office were the digital lenders contacting contacts of the actual lender, the person who borrowed the money. That was one of the biggest complaints because at the point where then they would then consent and say you can contact, you can access my contact. And it's when we had this big problem about debt shaming. But we have seen since change in law from the CBK law, so that that one of the compliance by digital lenders is to become data controllers and register with the office. So that has happened. So we've seen a decrease because what we did as an office, one, and the reason we're also showcasing here is what we call a guidance note for digital lenders. We also embarked on an audit for many of them, almost 40 initially, that has grown gradually, and also beyond that we've also done a capacity building. Because as a regulator, we thought those are some of the interventions to be able to bring sanity to the industry. Some of the fines have gone up to, the highest we fine is 5 million. I may not have the figures for cumulative, but we can provide that in terms of what we have fined some of the digital lenders. But like I've said, we've seen a decrease. It doesn't mean that we still don't have notorious out there, but there has been a decrease based on our intervention and partnership. From what we've seen, we've done almost 29 enforcements. And find many more, but the highest we have fined is 5 million. That's the highest we have fined. What we are saying, if you have, as an office, we are considering if we have registered you as a digital lender and there is a repeat offense as a digital lender, as an office, we are considering sharing this kind of information with the central bank, so that even as they register you as a digital lender, they are aware that there has been violation of the data protection. That is the sharing of information. One of the policy intervention that we continue to make as an office in terms of awareness creation, and in the coming year, you will see us more. Because one of the things we have noticed, even though there has been a lot of talk in terms of the data protection, and the controllers are aware, there's still a significant number that may not know about some of these rights. So those are some of the intervention. As an office, we continue to consider some of the intervention in as far as the guidance notes are concerned for other sectors. One of the pending discussion that we hope to complete is the one on guidance notes on security, private security, so that we are able to guide private security on what information they collect and how long they store it. So that is one of the other intervention in the near future we hope to conclude. The other one that we hope to guide as an office is on matters of cross-border, because one of the issues is that there's a lot of cross-border transfer across the different jurisdictions, is to guide on that.
This breakfast was around digital credit providers sharing data with the CRBs. We are in a risk-based pricing environment, what we are calling credit risk pricing, where all borrowers today are able to access credit, but with different pricing based on their credit scores, based on their credit profile and credit ratings. So this meeting was to sensitize digital credit providers and the general public around making sure that we are receiving, as bureaus, we are receiving the full file, we are getting data that is accurate, and we are getting data that is complete. This data quality issue is the driver of our market getting sophisticated, that borrowers will now start enjoying the benefits of having an economy that has decisions being made by data. Now, central bank has been supportive. Of course, we know the president from his inaugural speech really drove the conversation to say the bureaus ought to stop blacklisting, and that has happened. The market now no longer has any conversations around blacklisting, but we are talking about getting data, and as much data as possible that allows us to give the right credit score to every borrower. DCP customer base is 8 million, but that 8 million is a subset of the 23 million. So most of the borrowers in the DCP space are multi-banked, they are multi-borrowed. So they've borrowed from banks, they've borrowed from SACCOs, and they have also borrowed from DCP. So when we look at it, we are talking about 8 million being their customer base, but the same customer base is within the 23 million of the total population of Kenyans who have either one or multiple credit facilities. The meeting today has helped clarify the benefits of all the digital credit providers sharing data with the Bureau so that we do not have cases of debt stacking. There's something called debt stacking, where you're borrowing to pay another debt and you borrow from a third one to pay the second, you borrow from the fourth one. Now that debt stacking and debt piling as in general is a cause for worry in a society, because debt distress can lead to psychological stress, and as a sector we're working hard to make sure that this full transparency through sharing data helps us deal with this situation where somebody is borrowing incessantly beyond their borrowing capacity or borrowing for no real reason, and not just for entertainment. So these are opportunities that as an industry we're working on to deal with. DCP loan portfolio is still very small in this market, about 10 billion. The market has 4 trillion credit. So DCP contribution in terms of non-performing loans, in terms of amount, in terms of quantum, is less than 1%. But the fact that they have an adverse selection issue, most of the people who go to DCPs are people who are already having issues borrowing from their SACCO, from their Chama, or from their traditional bank. And so it's an adverse selection issue. They generally would have a higher NPL, non-performing loans or default rates. But outside the conversation around defaulting, really DCPs are not a major threat in terms of a systemic risk to the economy, in terms of creating an economy that has a lot of non-performing loans.
Today what we wanted to show is that we've been working in a collaborative manner with the Office of the Data Commission. We have come up with guidance notes that have helped digital lenders, also known as digital credit providers, to be more compliant. This compliance has therefore reduced the number of complaints against digital lenders and reduced the incidences of debt shaming by rogue lenders. So as of the March 2024, the CBK spoke about the fact that they have received over 500 applications. Of those 500 applications, they've only licensed 51. I don't think the challenge is that the digital lenders do not want to be licensed. I think the challenge is that CBK is yet to finalize on regulating the 500. What we do know is that they are working very hard to get us to that point where all of us are regulated, and we can't wait for that moment. One of the biggest challenges we have in the sector is a thing called over-indebtedness. This is where a customer has more than one loan with several lenders. And the only way we are going to solve that is through the Credit Reference Bureau and members and digital lenders sharing that data across the board with the whole sector. And so we as an association are working very hard to ensure that once an entity is regulated and licensed by the CBK, they immediately start sharing data with the Bureau to avoid that issue of over-indebtedness. So the unique issue here is that when you look at bank volumes, of course they're in the trillions, but when you look at the total number of customers that the bank is servicing are in the thousands. So I don't even think we have 100,000 customers with the loans. The difference with us, though, is that we are giving the mass market. So we have 8 million customers, and we are now lending between 10 to 15 billion shillings a month. And that's not including Fuliza or Mshwari. Those entities that are being called out for harassing boda riders are not our members. However, and I think this is a cross-cutting issue across the ecosystem, the consumer protection is at the core of the DCP regulation. As a result of that, compliance should be the focus of getting these entities to be compliant, because if they're compliant, then they have a minimum standard of consumer protection. But I think I'd like to add that sometimes the approach we use to try and get outcomes could scare away investors. And we need to be cognizant of the fact that these BNPL lenders have financed 68.4% of all bodabodas on the road today. So even if there are some complaints which are credible, we need to also remember the good aspects that these lenders have done and the job opportunities and economic empowerment they've created for the boda sector. And the boda sector is a very important sector, by the way. So it's important that we protect the investors too, while we are trying to find that balance of consumer protection.
Definitely, this is one of the more powerful events that we've had as DIFSAC. Okay, I look at you. Yeah, sawa. So this is one of the more powerful events we've had as an industry. The goal was, let's actually come together and start to talk about data protection, and especially it becomes a lot more powerful when we have the data commissioner in the room, because we get to come as an industry, raise some of the challenges that have come up, especially since we started to really be regulated under the Data Protection Act, and also started to be regulated under the DCP regulations under the central bank. So it has been a very fruitful conversation. For me, just as GM of Tala, but also in my heart as a director within DIFSAC, it's a great opportunity to understand what's top of mind for the industry, and what some of the biggest opportunities we have are that we can come together to fix, especially as DIFSAC. Some of the numbers that were named here, or mentioned here, is just as an industry, we're doing about 10 billion shillings daily to about 8 million Kenyans. So that's really, really powerful as a metric for us. However, that said, for Tala, we can, as I've mentioned before, we've served about 3.5 million borrowers to date, disbursed a little over $2 billion over the last 10 years, and we actually turned 10 years this year. So if I translate that, it comes to about 300 billion shillings that we have pushed into the market. Our repayment rates remain fairly stable. We average at about 95%. And that has been true for last year and also moving into the first quarter of this year. When it comes to the issue of serial defaulting, I always look at it as it's a factor of two things. One is either fraud, where we have fraudulent parties within the market. But second is also over-indebtedness of consumers. We just released the Money March report just a few months ago, and we learned that 6 out of every 10 Kenyans have more than one loan, are borrowing from more than one lender. So when you start to think about these statistics, and especially in a market where we've seen really high inflation, it starts to raise a very clear picture of the challenges Kenyans are facing around being over-indebted. And that's also something as a lender you have to factor in, because when you're underwriting, you have to think about fraud, you have to think about a customer's ability to repay you and willingness to repay you. So it is a responsibility and part of responsible lending to be able to filter that out. So for us, I do think it's becoming a lot more important, especially now that we are under the ambit of the central bank, to have a single voice as an industry. A lot of this comes from having to be in compliance, having to really understand what regulations will mean for operations of different lenders. And I truly think it actually presents an opportunity for us to also set the standard for how the industry should operate and continue to inform how compliance would look like. So as you've seen today at the event, there are a lot of questions for the ODPC, and it just shows the importance of us coming together to share a lot of our common challenges and help the regulators to really refine how the regulations are set up and how compliance is set up so that our businesses are not disrupted. Right now, it is actually part of our mandate to be able to share data with CRBs as part of being a licensed DCP. We are yet to do that, but due to some technical issues, but we should be doing that by the end of the year. So this is something that we are actively hoping to be able to do.
The possibility for us as an industry to continue to streamline information sharing mechanism and be able also to explore opportunities for strengthening the data quality that the industry continues to use. Because at the end of the day, the importance of the data that we have for either credit underwriting or for serving customers better as an industry, either in the banking industry, the microfinance industry, or even amongst the digital lenders, is that we need sanctity of information, we need credibility of information, and we need information sharing mechanisms that are strong enough. So amidst the issues that we continue to face as lenders is fraud amongst some of the borrowers in the industry. And the initiatives that have come up around reducing fraud is really the possibility of us strengthening our KYC, the Know Your Customer mechanisms. And one way to really avert customers being able to share differentiated information across industry players is to generate one platform. And one thing that we are initiating as an industry, particularly in the banking sector, is discussions around an electronic KYC mechanism, which would ensure that when a customer is onboarded within one institution, that information is made available to all other institutions, so that a customer needs not to give the same set of information to another entity, but is a standardized platform that allows bankers particularly to be able to know the customer's right at walk-in without necessarily having to ask for duplicate information. And also that averts situations where a customer can provide different information to different lending entities. And this is particularly helps us mitigate fraud incidences in the industry. We have a majority of banks now. I think more than 34 banks have received approval to progress in the risk-based pricing environment. And the beauty with this is that we want to laud initiatives by the central bank that having been a new issue, so the central bank was willing to onboard any challenges that banks encountered in the process of implementing risk-based pricing. So the implementation is ongoing and is good, and I think we continue to collaborate, and where there are issues, Central Bank has been very welcoming. Whenever we've introduced an issue or any of our members in the Banking Association has introduced an issue, they've been actually very kind enough to host the member and be able to discuss and iron out issues, because we believe that the future of credit markets in Kenya is actually well entrenched within risk-based pricing. And therefore, we foresee a situation where lending practices are going to embed the true principles of lending, which means that for all lenders, for all borrowers, they would have to be assessed on the basis of their risk, and therefore given prices that match their risk profiles. Credit information sharing mechanisms have been very instrumental, because at the end of the day, there's what's called information asymmetry. And to reduce information asymmetry, you need information, and credible information for that matter. So the credit information sharing in its entirety now has continued to enable banks to be able to do appropriate credit underwriting, because at the end of the day, when a customer borrows, a bank would have limited information on the customer, but then through the information mechanism, they're actually able to assess customers much more comprehensively, so that they can actually see how much exposed a customer is to other loans within the industry, and that helps a lot. And we continue to look at opportunities for enhancing the mechanism by looking at how can we add additional information beyond credit. What other information is important for purposes of credit profiling of customers. So we are keen to continue expanding the scope of information captured under the credit information sharing mechanism, to make sure that the predictiveness of the reports that are given by the credit reference bureaus actually are more informative for lending in the industry.